And in other words, I have said to Sentient Trader, I believe that trough should be at that particular position. In fact, there are only 3 troughs that I have pinned on this particular chart, and that has enabled me to produce an analysis exactly as I believe is happening in the markets at the moment. Okay, so has the 40-week cycle trough formed in price? Did it happen yesterday? Well, you will know that one has to be very careful at jumping to conclusions when trading according to Hurst cyclic principles. Okay, what we need to do is we need to look at the evidence, and until such time as that trough has been confirmed, I will not. I would never say, yes, I believe the trough has formed, okay? And one has to be very careful what one says as a Hurst cyclic analyst, because that trough is not confirmed until it is confirmed, if you know what I mean. And a Sentient Trader certainly is not going to start drawing diamonds under that trough until it has reason to believe that the trough has been confirmed. Nevertheless, we can start making trading decisions based on the evidence, and if the evidence is strong enough that that trough has possibly come in, then we can start making trading decisions on the basis of that. So let's take a look at the evidence and see what has actually been happening in the markets. First of all, this is the analysis that I prefer at the moment. In other words, I think this is a really good and accurate analysis. And what are the primary features of this analysis? Well, let me zoom all the way out and just do things properly. Let's start right out, looking at the bigger term picture, draw the semicircles. You will see that this particular analysis, I believe, that I'm just turning on my whiteboard. I believe that there was a 4.5-year cycle trough in March of 2009, according to this analysis. Now, I know there are some people with us today who have opinions about that 2009 trough being of even greater magnitude. It might even have been a trough of the 9-year cycle. But in this analysis, there is no 9-year cycle. In other words, I don't have enough data to position the 9-year cycle. So in other words, I'm stating with this analysis that that trough in March of 2009 is of at least 54-month magnitude. It might be of greater magnitude, but we don't have enough data in this analysis to really speak to that. Okay, of course there need to be 3 18-month cycles that play out over the course of the next 54-month cycle, and 2 of those have played out already, and the most recent trough of the 18-month cycle was this notorious trough on the 4th of October 2011. So since then, price has been bouncing out of that 18-month cycle trough. The 18-month cycle itself is in the process of topping and is probably turning down again now, and price is heading down towards the next expected trough of the 54-month cycle, which will of course also be a trough of the 18-month cycle and all cycles shorter. And so that big trough is expected in early 2013, perhaps the end of this year. And we've had discussions in previous trader chats about the fact that that trough might occur earlier than early 2013. We might see a trough forming towards the end of this year. Okay, so that's what's happening in terms of the bigger picture. Let's sort of take a step closer in and see what's been happening in slightly more detail, what's been happening for the most recent 18-month cycle. Let me just turn off those pins because they can be a little bit distracting. Okay, of course the market has bounced up out of that 18-month cycle, and it is now heading down into a trough of the 40-week cycle. Okay, now this is a trough that we've been talking about for several months. If you go back and look at the ST outlooks, I think way back in January, February this year, I started speaking about the 40-week cycle trough, which we were at that point expecting. I mentioned sometime in the northern hemisphere summer, and June, July, August. Okay, as we've approached the trough, as price has started falling down into the trough, we've been able to be a lot more accurate, of course, with when to expect that trough. One of the fantastic things about trading on the basis of Hurst cyclic principles is that trading decisions, are never made on the spur of the moment. We call it here walking into a trade. Because that is what you do when you're about to take a trade using Hurst cyclic principles. You walk into it, and it's a fantastically controlled process. And if you want to make money trading, you need to trade in a controlled manner. It is extremely rare that you open up your charts or open up Sentient Trader and immediately make a trade. And I know it has been a frustration for some new users to Sentient Trader that they work with Sentient Trader and they open it up on their first day. They've opened up this brand new, very exciting present that they have. Open up Sentient Trader and there aren't any trades, and that's because any trading decision is the result of careful consideration, and you walk into a trade because trading using Hurst cyclic principles is a wonderfully controlled process, because we have an insight. We don't know absolutely everything, but we have an insight into what is expected to happen in the markets, because the markets are playing out according to cycles. Okay, and with that information, we have an idea about what's going to happen. So all the way back in sort of January, February this year, I have been speaking about the fact that the market is expected to move down into a 40-week cycle trough sometime in the middle of this year. Okay, so we've been known we have known to expect that for months now. Okay, and it's very exciting that, of course, now it has happened. Okay, or it is happening, should I say. I shouldn't say it has happened, because we don't know for certain that it has happened. So let's have a look at a few more details about this analysis. You will notice that the cycle trough is positioned here on the 30th of January 2012. Okay, that's the first 20-week cycle within this 40-week cycle. So, of course, within any 40-week cycle, you expect there to be two 20-week cycles. So, according to this analysis, I have positioned the 20-week cycle on the 30th of January. Now, after this trough formed, I think the week after this trough formed, in other words, the first week of February, I believe it was an ST Outlook, or it might have been on a trader chat, I forget now, but I mentioned that it was possible that the 20-week cycle had formed. Price immediately bounced up a lot higher out of that trough than we expected, and after the trough in March, I started suggesting that, in fact, the 20-week cycle trough had formed in March instead of January. There is still an open debate between those two potential trough placements. And so when you're looking at an analysis of the markets, you need to have a look at what are the possible alternatives. And so that's the first possible alternative. And we'll take a look at a chart in a moment that actually positions the 20-week cycle trough in early March. And I'll point out a few reasons why I believe that, in fact, the better analysis is for it to be placed on the 30th of January. Okay, so this analysis places the 20-week trough on the 30th of January, and then it positions the 80-day cycle trough here in the first week of April, I think, or perhaps that's the 9th of April. I think it was the beginning of the second week of April. So that's about the 9th of April. That's the 80-day cycle trough. And since then, we have, of course, seen the formation of a 40-day cycle trough. Let's zoom in a little bit and take a look at even more detail. Let's count the bars from that 80-day cycle trough. 56 bars have lapsed. Is it possible that that the trough that we saw forming on Monday, in other words 2 days ago, is it possible that that was a trough of the 40-day cycle? Actually, no, it's not. People often ask, how long can a 40-day cycle be? There is a principle of variation which tells us that cycle wavelengths vary all the time. Is it possible that that trough that formed on Monday, and there was a trough that formed on Monday because the price the day before, or the Friday before, was higher, and the price the day after, yesterday, was higher as well. So there was certainly a trough formed on Monday. What strength that trough was, or what magnitude that trough was, is something we're going to hope to answer in the course of today's Traders Chat. So could it have been a trough of only 40-day magnitude? Is it possible that this analysis is wrong, and that in fact we should be instead of putting the 40-day cycle trough over here, we should in fact be putting the 40-day cycle trough over here? Well, we couldn't do that because there aren't very many hard and fast rules when analyzing according to Hurst cyclic principles, but one of the hard and fast rules that I have found it very useful to follow is that you never allow a cycle to be more than 1.5 times its average wavelength. The average wavelength of the 40-day cycle is 34 days, so the longest that a 40-day cycle can ever reasonably be is 51 days. Okay? Now, if that 40-day cycle occurred on Monday, that would have made it a 55-day cycle, which is too long for a 40-day cycle. So it's impossible that that could have been a 40-day cycle. Okay, is it possible that it could have been an 80-day cycle? Well, yes, it is possible, which is why we're talking about it today. Okay, so the other thing about this analysis that's worth pointing out is that I have positioned the 40-day cycle here. What date is that? That is looks like second week of May. Okay, so I've positioned the 40-day cycle trough here in the second week of May. Now, I have been in ST Outlook for the past 2 or 3 weeks. I've been suggesting that this might be a very viable position for the 40-day cycle. I still believe it is a viable position for the 40-day cycle trough, and there is an alternative, of course, which is that the 40-day cycle trough came in over here. Only 2 weeks ago, Monday 2 weeks ago, that must be the 21st of May, I think. Okay, so this is the analysis that I currently am favoring. Let's take a quick look at the alternatives, and the alternatives all have to do with changes in positioning of either the 20-week cycle or the most recent 40-day cycle. So here is one of my alternatives, which positions the 20-week cycle over here in March. Okay, that, as a result, means that the trough on the 21st of May was a trough of the 80-day cycle. Okay, and that would imply that the trough that occurred on Monday was a trough of only about 20-day magnitude, probably. Okay.